Welcome back, everyone. It's been a while since I've done a video on Verde, and there's been an extended period of hurry up and wait, in my mind at least, because there's been a number of things that I've kind of been waiting on to happen, and a consolidation period, and haven't really had much to say on the day-to-day, but we've kind of getting to the point here where I have a number of things to say, and so I figured I would do a video catching up on Verde. As a regular reminder, I do own shares in this company, so treat this as however you want. I have not sold any, and I actually bought a little bit, trivial amount more last week, but this is not investment advice. I figured a good place to start would be with my complaint intercepting slide. Basically, the info on Verde that I've spoken about before, but in case you're new here, Verde Agritech, stock tickers, it's a potassium fertilizer company. That's its primary business, but it's adding business units. It sells an organic and chloride-free fertilizers located in Brazil, which is great if you're an agricultural company. It's profitable, low cost throughout, so can continue to be profitable throughout the cycle, hopefully. And it is growing again, hopefully. And again, this is a long video, so some of you may want to listen at an advanced speed. Now, I want to kind of start with some bare points that I wanted to start with and kind of dispute or discuss, and then they're probably going to be sprinkled throughout this video of little points to kind of balance out some of the rest of what I have to say, with kind of looking at some arguments that I've heard and thought about. As I said before, and especially was my base case after we got the guidance update, was I thought we were in for a bit of a consolidation. My base case was that until August, being when the new plant approximately came online, we get some added results, and the move is complete. Those were a few factors that I was expecting we'd need to get through before the stock would be making new highs. Now, what I was not expecting was the stock to go back to levels that seemed unjustifiably inexpensive to me. I was expecting, bounce around 8 to 10 for a while, kind of get the results, see everything's in order, and then we can progress from there. We're back to the point right now where I don't really understand the price again, and I'll get a little bit more into that as we go. On the bear case, as to why the price is falling or should be falling or whatever, it's really, I've been through this last year, through it again this year. When there's uncertainty, there's a lot of imagination that goes involved, and people can fabricate stories that fit with what they're, expecting, or just, there's people that trade off of things they hear, like the bulls are too bullish with short-term expectations. And you know what? That's a case that I can somewhat agree with, and I believe that there are some people that are expecting things that are a bit too high, and so the market could stand to be disappointed. So maybe, another thing, when a stock moves up too quickly, sometimes you get a lot of implicit or explicit momentum chasing. So people that just buy a ticker that's going up and might not fully know what they own. So there's probably some of that involved. And then, it stops going up and they get nervous or bored or whatever. You hear prices are too high. When prices are too high, you need to sell producers. Okay, that's broadly a thing. Commodity prices are high, you sell the producers because they don't last forever. There's never a valuation discussion in that point, but, probably works. And my favorite is never buy commodity producers that look super cheap. Now, that one I find especially amusing, considering if you completely ignored that advice in this very stock 12 months ago, you might understand why it's amusing, because it looked like it was trading at, I don't know, 2 times forward EBITDA 12 months ago, and you know. But anyway, I think that I could concoct a somewhat credible bear case for a number of points, but most of the bears have not really pointed to any of those. So I feel like, it could be, there's some things that could be late, or some EPS that could come in under expectations or under what people are hoping or whatever. But the reality is, at a certain point, at a certain price, and I think that price is above where it currently is, a lot of these bear cases or a lot of these concerns lose their potency. They're not like, okay, let's say, people are expecting 10 and we come in at 7. It's like, at a certain point, we priced in 5. So, there's all sorts of factors at play, but realistically, I think a lot of pessimism is priced in at this point, and I think that a lot of it is market or sector or correlations or what have you, and are unlikely to be directly linked to the stock, and so prices are, people are making their own stories. Because at this point, what I look at the stock or look at the price, and what I think is priced in is approximately a 50% decline in selling price and missing sales volume by about 25%. That's kind of what I think the market has priced in. Now, are there signs that that is going to happen? Maybe the selling price is a bit high. Maybe they can miss targets, but would I say there's strong signs that any of that will happen? No, not that I've seen. So that, or I think we've essentially priced in, if the selling price of potash were to fall to essentially cycle lows, and you would get the associated multiple that would come with cycle pricing at cycle lows. I think if assuming we keep the growth target, I think that's essentially priced in at this price. Now on to where I think we are. Now, the company has stated multiple times that they're sold out some months in advance. Most recently, I believe it was till some point in August, if not the end of August. So hopefully, there's 2 points here. One is that hopefully this allows them to focus on margin and sales through which sales channels they are selling. For example, if you're selling through a distributor or through a sales team, there's added cost or price taking that is associated with that. And if you're sold out, hopefully, maybe you could sell more direct to consumer and, have added margins. So that's one thing. The other thing is that, their guidance is for 150% approximately in volume growth year over year. And some of that is, if they're sold out, capacity constrained. So they could be, they may have been selling a bit more if they weren't blocked by their capacity, particularly in Q2, which they're still kind of based on the old capacity, when in future years it will be hopefully much higher. Now, the other thing is, the guidance, and people look at across the space right now and are seeing the fertilizer companies trade at very low multiples. Now, people I'm sure would say, yes, but the price is very high, and so the multiples contract. And okay, yes, this is true. I've spoken about it in the past. But what I will say is that for Verde, at least, and I believe for some peers as well, the guidance numbers does not assume a full year of sales at current market price. You have to remember when this guidance came, and you have to think that, not everyone orders fertilizer right before they need it at market price. There's planning in advance, and there's all sorts of things. So this is not assuming all sales, or even nearly all sales, will come at current market prices. And so that's a factor of the longer that prices stay here, the more sales kind of come in at very attractive prices. And so there's pricing upside in addition to volume upside. And another point is that capacity is going to go up, and guidance for next year is in accordance with higher capacity, significantly higher. And I will mention that both this year and next year there is approximately 50% more capacity than what is currently being guided for. I don't know if any more will be realized, especially this year. It's not at the best seasonal time to have added capacity, but we'll see. Who knows? But any beats on guidance, especially at these prices, could be significant. And the expansion from here is already budgeted, already assumed based on internal projections or whatever. So any beats of that could be beneficial. I assume, one of my points in looking at this company is I don't assume these prices are going to stay here forever, which makes it kind of hard to value, because you're saying, oh, look how incredibly cheap it might look at these prices, but at some point prices are likely to decline. Now, I will also point out that although I assume this, although I believe that at some point in the future prices will decline, the not knowing how to project this kind of has me in a spot where I assume it will kind of start soon, but I don't know when it will start. Nobody does. So just kind of summing things up, over the next 12 months, we kind of get to a point where Plant 2 is completed, and that should happen within a month or so. We get to a point where we get some capital returns, hopefully in the best form possible. And we get, all the funding needed for Plant 3 is ready, it's there. And hopefully we can get into Plant 3 all the way into construction, permitted into construction. And then we get there. After all that, we can have a debt-free balance sheet, and hopefully some more potential for something accretive being done with capital. So if I'm all for multiple contraction and believe that prices will eventually decline, why am I bullish on a stock? Surely that can't be good for a company. Well, like I said before, at a certain point, you look at what's priced in. I mean, does the market think that prices will stay here? Is that what the market is assuming? And so is there downside if that doesn't happen? Well, I look at the company, I look at what the implied price is, and if the company were to realize all sales at full retail prices for 2023 at the current price, the stock would be trading below 1 times forward EBITDA. So does the market think that's likely? I don't think so. Do I think it's likely? No, probably not. There's probably going to be a number of this is sailed through distributor. Maybe the price falls a little bit. Maybe this happens, that happens. Who knows? But still, that doesn't seem like it's, it seems like the market is not expecting that. Let's put it that way. And so what I kind of look at is, okay, well, let's say the price of what they're selling falls by 50%. And, you look at what that would mean. And, say they're selling at 125 per ton, it would still be trading at around 5 times earnings. And, it still has EPS, earnings per share, that most likely grow from 2022 to 2023. So, at current or if you look at this another way, at the current volume growth rate, which again is not what I'm assuming will happen, but who knows? At that growth rate in 2024, with prices 50% lower, they could be doing $5 in earnings per share. So obviously, it seems pretty obvious to me that that is not what the market is thinking will happen. What will happen? I have no idea. I don't think anyone has any idea what will happen, but it's all about risk and reward. So what is, if that does happen, then I think that's pretty decent reward. If something less than that happens, and you still get, if you still got $3 a share in 2024, I mean, what at 50% lower prices, so expand the multiple, I mean, still could be decent. So, I believe the stock is not pricing in a lot. And, I do think that this company has had a lot of confusion, and they do get asked a lot of questions. I get asked questions, and there's a lot of questions around what is the price of potash, because it's not what you kind of see when you just kind of Google potash price or fertilizer price. It's kind of hard to find and kind of confusing. And even in Brazil, even with these pictures here, it's not simple. And then you kind of have to realize that it's more difficult to explain. It is pretty simple in that it is just potash price, MOP price, divided by 6 is the selling price. But there are different prices in different regions, and then there's different added costs, distributor costs, port costs, all sorts of things. And then there's different prices in different regions, and then there's different shipping costs that you need to subtract. So it is confusing, but as you can see, if you go through the numbers here, the prices have remained pretty resilient, and that's $1,218 US delivered to farmers. Convert that to Canadian, times about 1.3 these days, so it's about 1,500 and something. Divide that by 6, and you kind of get something near 250 as a realized price. Now you need to remember that there's transport, so you need to subtract transport costs for some of that. You need to subtract intermediary, whether that's a selling agent or a distributor. You need to subtract that from some of them. But also, the cost is 15 to 25, depending on which product, and depending on how much you think the new plant will reduce costs. But you can kind of see that there's a lot of margin, and even as prices may in the future at some lower level, there's still there's still margin, and they can still make money at far lower prices throughout the cycle, hopefully, because you need to also remember that although they have a disadvantage when it comes to transport, in that their product is more diffuse than potash, or than potassium chloride. They are located in Brazil. So if you can see on this slide, the added import costs that are common in importing potassium chloride to Brazil, they have an advantage there because they're already in Brazil, and so they can also go direct to consumer, so they can compete at lower prices even if the transport costs hit them harder. So I would disagree that this thesis needs prices to stay high, as I've seen some suggest. I would disagree with other points that I've seen or concerns about receivables. You look seasonally, it's normal. That's always happens. I also disagree that, with some of the focus I've seen on energy or natural gas, that's mainly relevant with a different type of fertilizer, which has different supply and demand, different export dynamics, and all sorts of things. So it's mostly noise, I believe. And so, I think there really needs to be more of a focus on what matters, and which is, price and supply and demand of the commodities that are at play here. Now, on that note, I figured I would give my 2 cents on potash, and really that's probably what it's worth at this point, because while I can say that this is a global market that has definitely seen some trade flow disruptions, the impact of what they have been and what they could continue to be or not is pretty unclear to me. Because I've seen data that suggests that in the early parts of this year, Russian exports to Brazil were little impacted, and there was plenty of potash that was moved to Brazil, and yet the price still went up. But I've also seen data to suggest that Russian exports through St. Petersburg have collapsed, and that was a few months ago. So it's maybe they're moving a different way, maybe whatever, but aside from the trade flows being disrupted, you never know if they're just moved elsewhere and get to their different destinations in a different way, and different things moved to different places. So, it's really hard to tell what's going on, and in this world, even for things that should be pretty simple to understand or to say what's going on, it's pretty hard to tell at times, and this is well beyond that in terms of unclear. What I will say is that grower margins, food prices are very high, and potash is just one of many inputs. So, grower margins are okay, and that can change, but potash is affordable. Now it's among the more expensive of the relatively expensive of the fertilizers historically, but food prices are strong, and so we'll see. In either case, one thing I've been looking at recently, and one thing I've been noticing, and you can do the math for yourself and kind of determine what you think, is that most of the big agricultural stocks at this point seem to be pricing in basically their price. Many of them are below their replacement cost. So if you look at their assets, if you look at whatever whatever they've had built in the past, what their capacity is, the life of the assets or whatever, and then you look at what it would cost to replace them, they're kind of trading below that. And this is despite them looking at and guiding for record profitability. And so that's why I think the market is not sending most of these things the signal to expand capacity. It is sending them the signal, take these profits and return them to shareholders. And, if you're buying back stock below replacement capacity, you're probably adding value. And you can kind of see it. Nutrien has been buying back 500,000 shares a day. And I mean, for context, they have 500 million shares, but that's still 0.1% of the company per day. And if you think these are companies with multi-generational assets, you can see why they're doing it. Because if you can in 1 year reduce their shares outstanding by 10, 20% or more, it kind of makes sense, to me at least. So yeah, that's kind of my view on the sector. Now, despite my being bullish on the stock and liking it at this price, there's a few things that I feel need to be said. I believe, from what I've seen, that there are some bulls that are, particularly in 2022, expecting way too much. And look, I've been there last year. That was me. That was exactly me. I think this is likely because of timing of when the prices have been sold, and that there's a number of things that have been difficult to understand. So there hasn't been that much clarity on, has been sold at X price versus expected to be sold at whatever the future price is versus, sold at a lower price than market because of, sales distributor, sales personnel, or whatever other factors. And my belief last year, and I kind of forgot about it when they released guidance, but my belief again this year is that this is, this lack of understanding has been weighing on the stock. And, maybe that is a great opportunity for, those who kind of want to make an assumption to make it and be right or wrong or whatever. But it's, in the short term, in the very short term, it's very confusing. And there have been a string of results, if you look at the past results, that kind of show somewhat of a price lag. But if you're trying to guess any particular results, like upcoming next quarter or whatever, investors, including myself, basically have to keep guessing at the price is here or was there when, and it basically makes short-term results virtually unguessable. So essentially, you just kind of have to listen to what the company is saying, and then kind of assume they're going to be more right than what you can guess at. Now, hopefully, here's what I'll give you with hopefully. Hopefully, this same dynamic in terms of people buying things, buying in advance and realizing future prices, hopefully that means that future bigger volumes get realized at today's prices. But in the short term, this leads to confusion. This leads to hundreds of questions that they get every quarter about price. And, I kind of understand why they're getting as many questions and why I get questions asking about price. It's because it doesn't show up when you'd think it will show up. Now look, if the market is going to penalize them for, whether it's the market doubting them or whether it's uncertainty or whatever, I don't have a problem with that, honestly, as long as they're going to do the right thing with it. Like if they have good visibility on, higher sales or higher prices or whatever, if they have good visibility or they really believe it's going to happen, the answer to me is very simple. If the market's going to doubt you, you could just, discount you or whatever. You could buy back shares. And, and this kind of leads me to one of my points about the committee. They keep talking about, or they've mentioned a few times, a committee that's going to decide the best course for capital returns. I'm not convinced I love that. In fact, I don't think I like it, because a buyback needs to be more than just a tool for returning excess capital. In my view, what a buyback is or needs to be or can be is a way to compound future returns, a way to take a little bit of success and turn it into an excess amount of success or a lot of success. Basically, if you think something is going to be worth more in the future, would you rather own a little bit of it or more of it? And that's kind of how I think about buybacks. And when you look at buybacks, it needs to be price dependent, and so you need to have someone making a call on not only how much capital you have, but what's the price of the equity, and what you need to know the business. You need to know what you can see in the future. You need to know what the business thinks it will happen. You need to know all those things. And so you kind of, like, if I was on this committee, the first thing I'd be going about or doing or looking at, and by the way, I'm not on this committee, or if you're in charge, you need to think of, okay, well, at what price point is dividends better than a buyback? And then, below, let's say it's below that price point. At what point is it just, okay, this is the method for returning capital. This is how it makes sense. And then at what point is it, okay, we need to spend, we need to, instead of just kind of gradually buying back, kind of waiting if there's something better to do or an opportunity, at what point is it like buyback heavy? And then, there, in my view, also should be a price at which point, below that price, it's like, okay, we need to readjust how much leverage we feel comfortable of using, or let's say we budgeted having 30 million at the end of this year. At what point is the equity like too cheap that we should maybe take that to 25 because we feel strongly about sales next year? This is where good returns can turn into great returns, or on the other side, bad returns can turn into horrible returns. And a buyback done right is amazing. A buyback done wrong is terrible. And so, if you view the company as exceptionally cheap based on, let's say you were to believe that you're going to be trading at 1x earnings next year, well, then, some of the capital can come from different places or can come from next year towards expanding, or just that type of thing. And I really hope they're doing it. I really hope they're doing something like that, or, in the end, that someone is able to make the decision and that someone is able to change the decision as things change. And that kind of needs to be, what's at play to make things as good as they can be. Now, on a similar note, I wanted to address the ASDP. Recently, there was news that at a higher price, the CEO would be selling some of his shares. So, as a shareholder, I obviously don't like it, but I definitely do understand it. So, I think some context is necessary. So, in the past, in a decade ago, the CEO who was running the company then, experienced the run up, perhaps unjustifiable at that point, in the shares, and then lost probably tens of millions of dollars. I didn't do the math, but I would guess. And then doubled down, rebet on the company, took it from couldn't go anywhere because they didn't have any money to, a company that is going to be making $50 million this year, and the CEO took his wealth to over $100 million. And then, for seemingly no reason, There's market chaos, there's craziness all over the world, there's, arguably just nothing happened, just stupidity here, there, the other thing, has lost $60 million. And, this is, this industry is volatile, it's cyclical, it's, all sorts of things. And so even if he were to believe, that the company is doing great and is doing great things, it still at some point might, make sense to not have nearly 100% of personal wealth in that type of company. Now look, after this sale, he would still have $100 million in the company. So it's not like he's bailing out of the company. It's not like he thinks it's going to fail or whatever. Not only would he still have $100 million in this company, but he's also basically said that, he's only selling if the stock price moves 50 to 100% higher from here, and then he's only selling, what amounts to about a quarter of his shares. So if you add the 800,000, then minus 3 million, so he's going to be left with 8 million shares, down from the 10 that he currently has. In most cases, if a company CEO were to say, hey, if the stock price doubles, I'm going to sell a quarter of my holdings, you'd say, okay, that makes sense. No big deal. So, it feels a bit different in this case because of the, the potential and the growth and all of that. But in the end, it's, if you can kind of guarantee the wealth of your family for the rest of your life by doing something, and you could still have enough money in the company to, turn 100 million into $1 billion if you succeed, I get it. It's not about what you, at a certain point, it's not about how much you can make, it's about how much you could lose. And if you can kind of secure your future while still keeping the dream alive, I get it. Now, what I would say is, if I was consulted, and again, I was not consulted, the one thing that kind of bugs me is that the price is probably, for today, as I've kind of said in the past in different forms, for today, that price is, not unreasonable. But by the time we get there, that price seems likely to be low to me. And I mean, unless we get there tomorrow, you never know. But by the time we get there and by the time the sales happen, it's a bit, low in my opinion. Now, I don't know how eager he is to get the money or whatever. But, if the, stock still has to get 50% higher or more and stay there for a while. So, that could take a while. Now, so again, I would probably have the price $3 or $4 higher, or maybe have it increase by like 50 cents per share a month or something like that, just so that, you get a more realistic, fair price by the time we get there. Because while I say that I think that price is okay now, I do think that with this growth rate, by the end of the year, it's starting to be low, and into next year, it's starting to be, cheaper. So I will, I want to give full credit and full props for the transparency. It's very, very nice to see that the CEO will say, to tell you in advance, as opposed to just try and, get out of the shares when it happens and try and fool the market or whatever. The transparency is great, although I would say the transparency for a buyback would be bad, because you'd end up paying higher prices. But anyway, that's kind of besides the point. Transparency is good. Saying, at a much higher price than the market, again, good. But still, given everything, the negative side is that I would have hoped that the price would be even higher still, because that's where I believe the fair value will go, and even higher over years. But I get the fact that, you have all of your net worth tied into a single company, and I doubt there's many instances where he'd wanted to sell, or he still probably believes it's going higher as he's keeping much of his shares there, like in the future. It's just a matter of, probably a matter of securing the future. But again, I haven't really discussed any of this. And this kind of interestingly, had this kind of prepared before I added that slide, but kind of ties into what I had next anyway, which was my target. And so, we looking back at my prior target where I kind of said 10 to 12 year end is kind of a base case. Now looking at that base case, prices have remained higher and the things have remained very resilient. I've assumed that they would fall substantially, and they haven't yet. I mean, who knows how much longer, maybe a day, maybe a year, maybe a decade. I don't know, but I assume the prices have fallen. They haven't. I was assuming a lower growth rate for this year especially, and the growth rate looks higher. I guessed that capacity would be more expensive to add, so I guess the higher capex for plant 3 onwards, and that has come in lower. I have kind of, I measured this against peers, and I said if, one of my scenarios was if the, Nutrien and Mosaic were good buys at those prices, then, it would mean relative value is even better. So those stocks have gone lower than those prices, so the hope for that type of scenario being priced into markets is lower. But for the time being, prices are good, and so this target it's now higher. It's not as much higher as I'm sure some of the most bullish bulls will hope. But, again, you can kind of piece together what I've said with different things. 3 to 4, in the mid-teens at the end of the year seems reasonable to me, given everything. And, if you look 18 months out, we could, if all targets are met, if growth looks like it's going to continue, then from here, this thing, could probably add a digit, and might not be a 1. Something that bears love to say when bulls are talking about how cheap a stock is cheap stocks can get cheaper. It's like, gee, thanks for telling me. And anything can happen in the market. Everyone knows that. Short term, it's random, it's noise, it's whatever. But do you know why cheap stocks get cheaper? Cheap stocks can go down mostly when their earnings are declining, or when they're pricing in more decline in earnings. If a stock's going to earn $10, then 9, then 8, then 7, then 6, it shouldn't trade at a big multiple of the 10 because earnings are declining. But here, my base case that I'm looking at is that prices will eventually fall by 30% or more, but the growth in volume will, in my opinion, should make up for that and allow their earnings per share to grow. And earnings per share can grow even more if there's less shares. And a quick point on normalized prices is that be careful if you are like me and look at historical prices for what their selling prices are. And why is this? Because if you look historically they would sell much of their material FOB, which essentially means that they don't take on the transport costs, but they do sell the material at a lower price. So if you're gonna take back, if you're gonna look at the company like, okay, well, let's say prices go back to where they were in, 2019, and you look at where selling prices were in 2019, and then you're like, okay, well, once I add in the production costs plus transport costs, the margin is pretty bad. You may be double counting the reduction in margin for transport costs. Again, this is just me kind of seeing something from a model that I've seen that I think might have double counted something. So just a quick point there. Now the other point I'd mention is the discount rate. Now people will also say that the interest rate in Brazil is very high, and so the discount rate needs to be very high and whatever. And while this is exactly why I'm anti-panic rate hike into destruction, because it discourages investment, I will also say that this, Brazil's high interest rate is because Brazil has a historically high inflation rate also. So if you're looking at returns in Brazilian reals terms, then it's, you need to account for the inflation. But I'm also looking at, in this case, I'm looking at things in Canadian dollars. I'm adjusting for inflation, and I'm, in prices, and I'm just looking at the volume. And if you look at the volume growth rate, even if you discount by 20%, you can kind of look out a few years out and you see what the free cash flow yield could be if it's successful. And, you can kind of put your own numbers on what that might be worth. But either way, I think, you could use a 20% discount rate if you want, and it still works. So in the end, I think that the re-rating here has caused a bunch of the momentum story, a bunch of momentum in a stock ticker and stuff to kind of get blurred into a situation where there's probably some people in the name who kind of know what they own, but kind of are not, convinced, or are easily change their mind when the swings in the momentum. And, I would say I saw the same thing last summer. The stock fell 50% for no apparent reason. It followed the sector up when the price went up, and then it fell by 50% because everyone assumed, oh, junior penny stock, not any cash flow, whatever. And, people just dumped it. And, I sat there looking at it, I'm like, this, if they do what it seems like they could do, this price doesn't really make much sense, even if you contract the multiple. And, as crazy as it is, it happened again. And, on a multiple basis, on a forward multiple basis, this looks cheaper than it was last year. And now, look, there are reasons the price is even higher, so there's more multiple contraction. But again, I feel like we're right back kind of where we were before in terms of, things are going well, and I don't really see a reason for kind of what's happened. But the market does funny things, and, maybe it's right, maybe it's not. We'll see. But to summarize the situation as I see it, and why I remain bullish on the stock, is you have triple-digit growth, and this is triple-digit growth in volume, not, the price went up so much, so there looks like the thing's growing when it's doesn't matter. It's triple-digit growth in volume. And beyond that, if you look into the future, if you look at, okay, what's the guidance for this year? Okay, well, 1 million tons. What's the max capacity that we could, target in the feasibility studies? Okay, 50 million tons. Okay, so that, some growth potential. You look at the multiple. What are you paying for this thing? Are you paying 50 times this year's, what they could earn? No, it's a single digit multiple. And, like I kind of started this video off by saying, we had a fundamental catch-up period. We had to build plant 2. We had to work off some of the, okay, well, we're going to do well this year. We got to turn that into, okay, we're doing well this year and we've done well this year before we can kind of look at next year. So, I do not believe the recent price action is representative of what has been going on with the company. Now, I also have said that, I kind of thought we were a bit ahead. And, at this price, at this time, I do not believe that we're ahead anymore. I think we're kind of, in line. And from here, if you believe the company is going to succeed in the future, you get the growth potential and you're not necessarily paying for it. In conclusion, I again will say I have difficulty making sense of the price now without some serious failures. But, I would be very happy if the price stays here for the next year as the company succeeds in what it is doing, because I believe that would tell the company that they should buy back every single share they can from everyone who thinks it's a good idea to sell at these prices. And that's, perfect all around. And so what I will say is, do the math for yourself, discount accordingly, determine what you think will happen with prices, how much you think they're going to decline or not, and determine what valuation you think makes sense at different prices, because I use different multiples at different prices. And again, do you think this price makes sense? What do you think it's pricing in? And what, do you think this is a good opportunity going forward? I do, but I can still be wrong.